Yo, yo, yo. Welcome back to the channel. Today, we're going to do two separate videos. This video is going to be breaking down SPY, my entire logic behind what I did, breaking down my tweets regarding it today, as well as kind of my overview on it, what I think about it on a broader scale, what I think is going to be coming in the future. So yeah, if you're enjoying the video, make sure you drop a like, comment your thoughts down below at any time if you have any questions or anything like that. Liking the video and watching until the end is the best way to tell the YouTube algorithm that you like the content so that they'll recommend it to you and others who may be interested. So I appreciate the support. So yeah, with SPY today, yesterday, if you watch my update, I broke down my logic in why I entered puts on SPY. And I'm pretty sure that I entered right around the high of day. Yeah. It was like 438.50 or something. That I was buying these puts, and the reason that I did that was because we indicated that there was a rising wedge, pretty much like this is how I was drawing it. Would have probably been like here. Rising wedge, and then you just had this real uninteresting volume, right? The volume was just generally on a decline throughout the day. You kind of got this pumpy volume right here that kind of sent the price up, but there was no volume to follow up the higher highs. And so that combined with the rising wedge kind of nature of this move, how you could see that downward pressure coming from up top, had me pretty convicted that you were going to see downside. Now, I did tweet out towards the end of the day where I was like, hey, we see this big old knife, right? Or not really a knife, but you just drive down pretty hard. I took a little profit down here, right? Because this is a pretty healthy move. And, you would expect that there's going to be some sort of bounce after you go down, almost 2% on SPY. So I took a little bit of profit, but I swung. And then I continued tweeting throughout the day in after hours because I was like, damn, it was down another over 0.5%. I was like, damn, these are really gonna do well. It was under $430, and then boom, you popped up futures as well as post market. You had this pop up, and I think it was a mixture of things here. I saw Unusual Whales tweet that Nancy Pelosi was saying that she was going to run for office again, as well. Microsoft had a really good earnings call, and they obviously had a big pop. I wasn't playing Microsoft either way, but obviously Microsoft is a very influential company, right? So then pre-market opens, and again, like I said, futures were running high. Pre-market opens, and it's at like $440. So the puts that I was in obviously were not nearly as profitable as they would have been if they opened at 430. So I was a little disappointed in that. But I wasn't, I wasn't in a position where I was like, okay, I'm not gonna stress out over this. I was like, okay, we're already down, so I was in a position where I'm like, I'm just gonna hold on and see how the day goes. Well, so then market opens, you have this initial dump, which I was kind of expecting after all this, and then you kind of rise up here to 443. And to be honest with you, what I did in reaction to that was I took a nap. I did not do anything. I didn't react at all. I was like, let me take a nap and see where it's at when I wake up. So this would have been like 9 o'clock. And then I woke up at like 10:30, and it was down to like 440. Still not doing too well, right? Because it was way up here. Obviously, I'm getting theta decayed out. And then me and the fiance packed up the kids, and we were gonna go to the doctor. So we had an appointment. So we started to go to the doctor, and we were on our way there. And I was riding. My fiance was driving, and I'm watching SPY, and this is the 1-minute chart. And literally, while we're on the road, I start seeing this, this crazy rocket, and this is right when Powell starts to speak, right? So, and I tweeted out, oh wait, let me see what I tweeted here. Yeah, so here, all the way back at 8:30, I think it would have been 8:30 in the morning my time, because I'm Central. that SPY has a lot of reason to come back down to 435. And my basic logic behind that was essentially that you just had this giant gap in price, right? And even in pre-market, you're going to want to fill the regular gap. And we'll talk about that later. You're going to want to fill the regular gap in general if you're pretty close to it. But you definitely know that here, where you don't even on SPY itself, right? The price action is there on futures, but on SPY itself, you don't even have pre or post market pricing to 436, right? As well, I think I had a pattern in here or whatever. I'm not going to pull up the tweet. We're not going to worry about it too much. So this was my tweet after I woke up from my nap, okay? It said market-wide pump on FOMC day, because obviously Powell was speaking today, with low volume, right? So you just have this crappy volume again, right? This is the same sort of environment that I'm talking about. You get this opening, right? You're going to have more volume at the beginning of the day, okay? That's just natural. But you have this driving up price, and especially on top of all of this that you already had moving up. And I'm just like, I don't know. What's the logic, right? There's no supporting volume here. And I think that I even elaborated and I said, I can't understand why SPY is trading up here right now. It should be 430. And the reason that I said that was just because you were stagnating up at this $440 range, but nothing has fundamentally changed, right? And there's no volume. So if there was volume on this move, right, if you had good volume going into FOMC, then I'm like, okay, yeah. So again, these are not about entries. This is just kind of me putting my thoughts out there on Twitter about what's going on throughout the day. Like, I'm just like, it just doesn't make any sense. It doesn't make any sense for it to be doing this. So then we're on the road, and literally, and I mean, I tweeted this out. I said, guys, I'm buying puts, LOL. Because it was just, the FOMC opens up, right? I'm going to the 1 second chart now just to show you like how precise this was. I said, guys, I'm buying puts, LOL. Because FOMC meeting happens, and then the price just starts driving up drastically. And you got as high as $444, which is where when I sent this tweet out, I literally got out of Twitter, turned around and bought puts, okay? And the reason that I did that was not based on any pattern or anything, but I just saw this drive up in price, and the volume was still favoring bears to me. Like I see just like overall we're in a downtrend, right? So I'm just favoring the bearish cause a little bit more. And a little bit of it might have been like, I don't know, just like a reaction like to this ridiculous parabolic movement, and I just knew that it was almost instinctual, if I'm being honest. Like, I was just like, this is a fake out, man. This is meant for people to get dumped on, dude. So, where is this? Oh, wait, hold on. Let me get the tweet back up if I can. Maybe I can't. Anyway, we got the puts at the 444. And I mean, I literally was buying puts. I bought puts on Amazon, bought puts on SPY. And so then I was loaded up, right? So I'm just chilling. And I got my average down, right? Let's see. And then I just kind of was letting people know on Twitter exactly what was going on, where I was like, I never sold the puts, I swung. I just took a nap and averaged down on that pump. So basically, I was just letting people know, hey, a couple minutes later, just to let you know where I'm at position-wise. And now the price was around 441, 442. I'm like, hey, obviously we took profit yesterday after we kind of profited from this dump. We took profit and then swung some. And now what I'm doing is I'm further averaging and de-risking my position in a way, right? By averaging down, because I don't believe that this thing is just going to go to the moon. And obviously that's risky. But for me, the volume was just giving me conviction, basically. You just didn't have the volume, and then all of a sudden you just start rallying, and I'm like, okay, as soon as the meeting starts, yeah, that sounds like a whale is trying to dump. That's just kind of how I was thinking about it. So then I said, if SPY breaks below 438, because it just started dumping, I said, if SPY breaks below 438, stock market is getting canceled. Which is a little dramatic, I guess. But the reason that I said that, I said it, I was actually in the doctor's office when I tweeted this. Like the doctor stepped out of the room or whatever, and I looked at the chart and I was like, oh shit. And I mean, literally, you see this candle up here. It was like 439, kinda. It's hard to tell exactly what time the tweet came out, but then, boom, on the next candle, you just crash right through 438. You come back to try and retest, and you don't even get to 438. You get to 437.75, and then boom, you just tank from there, and you just get this giant knife. So why 438? Well, the reason that I was saying that if it breaks and holds 438 was because you see all of this trading that was happening at 438, right? It bounced here, and then once it broke here, it got sent down. It bounced here, broke here, got sent down hard, bounced above here, broke down here. So it just keeps getting rejected by this 438, and then you bounced off of it here. You found it as support earlier in the day at this 438, but remember, the volume was not very good. The volume was not very convincing on this bounce, right? Because all day, and I'm just sitting here like, none of this makes sense, right? So then once we got this big old knife, I was green already on the trade, right? Because I averaged down. I'm like, yo, if it breaks 438, we're going to Tindy Town. And look, you can see that. Look, this is the 1 minute chart. You can see. Look at all this red. Look at the volume candles on the red side. It's just as simple as that. Like, so let me just further analyze this. And this is not a pattern trade. Like yesterday, that was a pattern trade. This was more of a volume trade. Okay. And I didn't have stop losses in or anything like that. And the reason was because I was following the volume, not the price. And that's pretty risky, if I'm being honest. So you definitely want to understand what you're doing before you do that. But just look at it. Just look at this red volume versus this green volume, right? This red volume versus this green volume. It's just as simple as this. On lower time frames, you can really tell. And then look, you get this little price pump right here that belongs. Look, I'll draw a rectangle here so it's clear. Can I do this? Oh, no, it doesn't. That didn't really work. Anyway, you get this pump up here, and then bears and bulls are fighting it out at this 436 kind of level. This is kind of like your retest range, right? You came back, you retested this zone, and then, boom, you break down out of it. So basically, my logic is you see the volume favoring bears. You know that the general trend is that bears have been in control now for almost a month, right? Bears have been in control since January 3rd. So you have the general trend, and look, at some point I will be wrong when it comes to something like this. But if you're going with the trend, right, you can be pretty confident in saying, hey, this is a more distributive action, and look at this volume. Look at the comparative volume here, right? Look at this volume compared to the volume that was happening earlier in the day. Now, everybody was kind of sitting on the sidelines going into the meeting. Big money, right? Which makes sense because they don't know, well, quote unquote, they don't know what the meeting is going to say. But they might, but whatever. But the price was pumping while there's nobody's trading. No big money is trading. And as soon as big money gets back involved because of the meeting, you see this big price dump. So that's kind of the logic behind everything that I was saying. And that's, I guess it's just kind of the motive for my entry. And it's hard to explain stuff like, but I just saw that pump and I was just like, nah, man, this feels like distribution. And then at the bottom of the whatever we got that 438 knife, right? The rejection off of 438. Price was like way down. I just sent out fire emojis because I was like, let's go, I'm sure somebody banked off of that. So hopefully that kind of explains the logic, and hopefully you gain something from this video. Again, this wasn't really a pattern trade, but sometimes it's good to have like multiple ways that you're viewing a chart, like I was really just following the volume. And usually when you see this kind of pumpiness going on, the price is just in a place where it just doesn't seem like it should be. Like it just didn't seem normal to me, right? And then you're in the larger bear trend, that kind of supports my thesis. Now, again, I could have been wrong, but it was a bet that I was willing to make. It was a risk I was willing to take, and I put myself in a position where I was de-risking myself rather than taking on more risk, because I lowered my average, if that makes sense. So hopefully you enjoyed the video. Make sure you follow me on Twitter if you want to see updates like this, like kind of what I'm thinking throughout the day. I'm not like trying to send out alerts or anything like, yo, buy these puts at this price or whatever. But rather just trying to like walk people through my logic as much as I can throughout the day, because I'm following the stuff, and I think the SPY is really important for people to be watching right now. And I think that these shorter term trades are going to be really important for retail in the market over the course of the next couple years, just because I expect some choppiness and maybe more downside than we've seen in the past few years. So hopefully you enjoyed, and I've said that 20 times, and be on the lookout for my second video today. Peace.